And welcome, everyone. Welcome to a special episode of Bodies and Wigs. I am your whatever. I'm Ted. I am looking into this Ripple SEC lawsuit, and I thought since probably no one really understands what the heck is going on, even myself, I decided to dig in and try to figure it out. Try to figure out what is going on. If I'm looking all over the place because I'm looking at a screen, reading a screen, I'm looking at my computer, making sure everything's running okay, and my webcam is right here. So, trying to figure everything out. So if I look cross-eyed, forgive me. All right. So first, I guess the question is, why is Ripple being listed as a security? Or why is it trying to be listed as a security? First question is, what constitutes as a security? All right, so I read through this, and this is on the American Bar Association. I'll present the link in the description. But basically, a security must, I guess it would be, some type of investment. I guess is the best word to say it. I really have no other way to say it other than, like you invest in a company, you expect to get some kind of type of return. Whether it be dividends or something like that. Here, let me see here. These are exemptions. Registration process. Definition of security. Okay, so there we go. Under the Securities Act, it's defined as any note, stock, treasury, stock, security future, security-based swap, bond, debenture. I guess that's how you say it. Debenture evidence, indebtedness. Certificate of interest or participation of any profit-sharing agreement, collateral trust certificate, pre-organization certificate, or subscription, transferable share, investment contract. I think that's where they're trying to get them, is this investment contract, right? Voting trust certificate of deposit, or a security fractional and undivided interest in oil, gas, or other natural or other mineral rights, any put, call, straddle option, or privilege on any security. That I'll bring up later because it's. I guess okay. I'll bring that up later. Remind me to put the put, call, straddle option. Or privilege on any security, certificate of deposit, or group or index of securities, including interest, any interest therein, or based on the value thereof, any put, call, straddle option, or privilege entered into a national securities exchange relating to foreign currency. Okay, remind me about that. In general, any interest or instrument commonly known as a security. Okay. Or any certificate of interest of participation in temporary or interim certificate or receipt, a guarantee, a warrant, or right to subscription to purchase any of the foregoing. I don't really know. That's a bunch of legal mumbo jumbo. Like I said, I've been reading through a lot of this, and basically, like I said, stocks is probably the first thing I think it was listed on there. Any note stock, treasury stock. So security future, basically anything that is meant to invest in to bring you profit. So the question there becomes, why is Ripple different from Bitcoin? Why is it different from Ethereum? Why is it different from all the others, the cryptocurrencies that are out there. Why is SEC coming after Ripple more than any others? So I tried to do some more digging. Well, this is the article that I first found, and what SEC is saying. So what the SEC is basically kind of saying is that I read the complaint. I think it's basically way up at the top. I've been reading a lot of this. That there are basically two kind of things that are going on in this. That XRP and Ripple are two different things, right? So Ripple is the company in which started the coin XRP, and that it is benefiting from the investment or people buying the coin. Even though the coin is very similar to other cryptocurrencies, it's open source software, it's programmable, but they're saying that let's see here. Ripple never filed as a security. Ripple engaged in illegal activities in 2013. Which is funny because even in this right here is Ripple's response to it, saying that they actually settled with the SEC years before the SEC, July 7th, 2017. Ripple relied on expert advice, regulatory pronouncement. So Ripple had been in 2015, DOJ and FinCEN settled with the case with Ripple and determined XRP was convertible currency. So why are they trying to sue now? Is the question. It's so confusing. Why DOJ and FinCEN? What FinCEN is, the financial crimes something. Kind of listed up here, but FinCEN was a big helper to Bitcoin being known as cryptocurrency and actual currency, and I think in here in the lawsuit, they're saying that Ripple knew that it wasn't backed by anything like. Like a normal currency would be backed by, but then again, no currency is backed by anything right now. All paper currencies or fiat currencies are not backed by anything other than trust. Everything is backed by trust. Even Bitcoin right now is basically backed by the trust that it's actually just worth what it's worth. Well, that will impact that people are putting money into it, and and because there's a finite amount, there's only 21 million Bitcoin from what I understand. So with that being said, can one person own all 21 Bitcoin? Well, with that, or 21 million Bitcoin, well, with it being $25,000 a piece, well, since not everybody owns a Bitcoin, the answer is no, obviously. So that's why they, the scarcity element is there. I don't think there is, as I was reading more, I don't think XRP does have a cap, right? So, but the big thing here is, I think, what they're talking about right here, right? To prove its case amounts to unprecedented and ill-conceived expansion of the Howie Test. Right. So I read up what the Howie Test was, and on Investopedia, and basically what the Howie Test was, it was a group of, or it was some landowners in Florida, and had a big citrus farm on it, and what they did is they leased it out. And so when the company decided to lease out half of its large property in order to finance an additional development, the question of whether or not land itself could be seen as security came into play. Purchasers of the Howie land, who themselves had none of the knowledge, skill, and equipment necessary for the care of the cultivation of citrus trees, were speculators. They purchased the land based on the assumption that it would generate profit for them as a result of effort of someone else. So, they're saying that basically with Ripple, Ripple is basically the owner of this digital currency, and that you purchasing into it is, you are the person that is, the person with no knowledge, skill, or anything about like that, helping it generate a profit. So basically, Ripple would be the, I guess, quote unquote land, right? Quote unquote land of the crypto space, and you yourself would be the renter or the leaser of the coin, which would then generate profits for Ripple, the company. But Ripple is saying that it is a currency. XRP is a currency. It is similar to Bitcoin and Ether, which the SEC has determined are not securities, by alleging that Ripple's distribution of XRP are investment contracts. So that's what I said earlier. That's where they're trying to get them as investment contracts. While maintaining that Bitcoin and Ether are not securities, the Commission is picking virtual currencies winners and losers, destroying the U.S.-based consumer-friendly innovations in the process. So that was my question. Why is Ripple considered a security and not a currency? Well, the next thing I looked up was, can Bitcoin, how did Bitcoin first come into existence? Well, this is what the SEC is. And then, so I looked up, can Ripple be mined? Because that's what made Bitcoin, right? You could mine Bitcoin. You cannot mine Ripple. So I think that is another fundamental in here that we need to take a look at and try to understand, I guess, since it can't be mined, would that throw it into the security, realm? Because others can be mined. And also, if you go back to the definition of what a security is, it talks about selling to accredited investors. That's what I was looking for. So accredited investors, talking about basically a large. Let me see if I can find what they say as accredited investors. Here we go. Accredited investors under Rule 501. A security is actually any individual earned income that exceeds 200,000 or 30, blah blah blah, in each prior 2 years, and reasonable expects the same for the current year, or has a net worth of $1 million, either alone or together with a spouse, excluding the value of a person's primary residence. Certain entities such as a bank, insurance company, registered investment company, business development company, or small business investment company, partnership, corporations, nonprofits, which generally are required to have assets in excess of $5 million, or equity owners that are all accredited investors in any trust with total assets in excess of $5 million, not formed to specifically purchase the subject securities, who purchase is directed by a sophisticated person. So that led me back to this. Let me see if I can find it. Which one is it? Yeah. Okay. So XRP is as a bridge currency. So how XRP was basically designed was it was designed to basically facilitate trade between big bank to big bank. It was, it does, I guess it is considered a currency, but what it was designed to do was to make the transfer of money more readily available, not just person to person, but from what's the word I'm looking for? Institution to institution, right? Here it is. This is exactly what I was looking for. Ripple is a for-profit entity targeting institution and not retail investors, and as such doesn't require the mining process, but depends on the business and institutions incentivized by the business problem. Ripple is solving for them. So that is where this dilemma lies, right? So, can it be listed as a security if if its intent was to not be mined, right? So you can't just take a computer and start mining Ripple. It was basically all designed by a computer program. It was set out, and I think they were saying that in the initial whenever it was first developed, the two creators both had received 80% of Ripple, and that's how they were paid. So if they were paid in Ripple and they were expecting it to grow, that would be considered an investment in itself, and because that would be considered an investment, that would be a security, rather than paid in American dollars or whatever it is, that they could get paid a salary, something like that. Whereas to Bitcoin, it was kind of, if you know the history of Bitcoin, it was just basically everybody kind of contributing to the blockchain and contributing to the source code and things like that, making it more sustainable and people mining it. So they're defining it as Ripple is a company, right? And then Ripple is a for-profit company that can't be mined, and that its intention was for institutions. So that is the SEC's basically big argument against Ripple, right? And so Ripple saying, no, we're a currency that can be, it can be put on the exchange and sent back and forth, just like all other currencies, all other cryptocurrencies can. So, and another thing that I wanted to bring up is, once I said remind me to talk about these. So, once we go back to the definition of what is a security, and it has, like I said, any put, call, straddle option, or privilege on security, any security. Well, and I guess on any security. Well, they put security on the definition of security, so it kind of screws me up, because there are put, call options on Bitcoin. There's put call options on Ethereum. There's put call options on Ripple. So, and I mean, there's put call options on almost anything, and on commodities too. There's put call options on currencies. So I guess that's where I don't understand why they would specifically put any put, call, straddle option or privilege on any security, if it's also applied to other things like currency. So that's something I don't really understand. But maybe somebody out there can help me understand it. If you can, let me know. Like, if you were to go to, let me just pull it up really quick. Let's go to barchart.com. All right, so if you don't know barchart.com, then it's a great source for any kind of, it does have, see right here, currency, Bitcoin futures. So Bitcoin futures, you can go over here. No, I don't need to sign up. You can check out the futures price for January, right? Even has it over here. You can go over here and go to options prices. and you can put a side by side, and so you can see the strike price, right? So if you don't know what options are, basically that's what I'm trying to talk about. Whatever it's talking about, put, call, a straddle option, something like that. So if we were to go back here, here are your call options, here are your put options, and here is your strike price. So basically, if you, and here's your open interest. So open interest is basically how many people have open contracts, right? So, and this is another thing that is with the whole Ripple dilemma, is that the investment contracts. Well, Bitcoin also has investment contracts, in the strike price, or in the the put, call, straddle option sphere. So they're kind of muddying the lines. The SEC is with this. I think they're really trying to set precedent, as to what can and can't be considered, cryptocurrency, I guess. And Ripple kind of, they kind of did themselves I wouldn't say a disservice, but they differentiated themselves whenever I guess it couldn't be mined, and they targeted large institutions. I think those are the two things that are gonna get them possibly listed as a security and not a cryptocurrency. So I'm not sure. We'll have to see. What does that mean for the actual, you know, technicals of uh, of uh, Ripple? Well, this is something that I always talk about. If you haven't ever watched my channel, you're probably wondering why the heck am I talking about the news of Ripple and cryptocurrencies in this case. And when all I usually do is just go over charts, because that's what I usually do, is I just look at charts and I do a technical analysis of it, and I'll tell you what I think is going to happen, because I'm not for sure if it's really going to have that much of an effect, because once something is publicly traded, that's where I look at everything in a smart money perspective. So, smart money is a theory of trading. If you don't know what smart money is and you've never heard of it, try to do a good deep dive into it. Yeah, I promise you'll take an interest to it, because what smart money basically says is that, excuse me, that there is manipulation in the market at all times, right? Even the Bitcoin market, it primarily looks at the forex market, the foreign exchange market. If you're exchanging, the euro for the dollar, or the pound for the yen, that's where it kind of originated from, I guess you could say. I guess the first person that had ever talked about any kind of manipulation in the market would have been Wyckoff. He talked about there being an operator in the market, and noticing that in the accumulation phases of crypto, of currencies, or of any kind of stocks, that there was something off about it, that when price would get to a certain point, it would either drop, or it would do something, and he noticed that there was kind of a pattern to it, and so he was able to read the tapes, and able to kind of justify, not, I wouldn't say justify, but understand where price was going to go to next, just based upon the accumulation phase, and based upon what's the word I'm looking for, the operator that was kind of in the market, and pushing this idea, I guess you could say. So. So what I look at now is, now that we're talking about smart money, and with that being said, and Ripple, recently taking off, because I remember uh, trying to trade Ripple, or trading Ripple, not too long ago. I'm in the 5 minute one. I should probably be looking at the one. Actually, let's go with the 4 hour. Um, yeah, back when it was here, back when it was in the 20 cents range almost the entire time. It couldn't. I feel like it was like a 20, 30. I remember. Well, it wasn't around February. It was. See, here, let me get rid of this auto thing. Let me push it down. Well, actually, I need it more up, because it was probably somewhere around in. Yeah, somewhere around in here, September, October. I can't remember where it was. Where it was trying to like push up a, you had this huge area right here, and it seemed like it couldn't get up there, it couldn't pass it. But then all of a sudden it just went all, it just took off. So the whole theory of smart money is that it goes a little bit further than Wyckoff, and it says that there are areas, right, to where uh, I guess price accumulates, and then it distributes, and it moves to a different area and accumulates and then distributes. So Wyckoff just says accumulate and then distribute, as to where smart money says accumulate, distribute to another area, accumulate, distribute to another area, accumulate to another, and distribute to another area. And then so now what we're looking for is what the price can do now. So, and with all these trading robots that have entered the market, with institutions there, and I was reading something or watching something today about, there are trading robots designed specifically for institutions, and when trading robots are designed specifically for institutions, you are going to get money manipulation no matter what. So that being said, yes, the price of Ripple can be manipulated, because there's so many people entering and exiting the market trying to get the price to do what it wants to do, and because there are these institutions that do have the kind of accounts that can push money in the direction that they want it to go. They're gonna do that, and they're gonna do that for their benefit. So that's why I see this whole apparatus that happened since basically uh, mid to late November up until now, as an institutional play. This is a huge institutional play. Some institution made a fortune off this, while the little guy got screwed, right? Well, and unless you were scalping, unless you knew what you were doing and you knew how to enter and exit the market at this time. If you were just a simple investor in XRP, and let's say you put in half of your life savings at 53 cents, boy, did the people who have those accounts that know how to manipulate this market take you out. That's exactly what they did, and that's exactly what they wanted to do. And unless you're hodling, you just have to wait for that to come back, or swap it for another coin, or what I like to do is I really don't hold any equity in any other coins. I trade them all as CFDs, which is known as contracts for difference, right? So download MetaTrader 4. You find a broker that has crypto as a CFD. A new one that I found that I want to try to use is called Xcoin. So far, Hugo's Way is one that uses a lot of different cryptos. The only bad thing about Hugo's Way as a broker is that it is not regulated. So if you do have a Hugo's Way account, and you do if you make a good profit, take it out pretty quickly. That's what I try to tell people. Take out the profit. That way you're not left holding a big bag, because Hugo's Way could be shut down pretty fast. And if you have, thousands of dollars sitting in a Hugo's Way account and it gets shut down, you're kind of screwed. You're SOL. So, what would smart money say, right? What would smart money say about this? Well, whenever it was doing all of this work, right? And I'm looking at this huge run here, and the funny thing is, okay, so this is XRP USD. I want to look at something else. I've been looking at Dash. I actually threw in a good trade in Dash last night before I went to bed, and it was a good buy. And I got out this morning right around 112, which was perfect because now it looks like it's bouncing back. So made a good CFD trade on Dash. I saw the signal and took it and ran with it. But that's neither here nor there. Let's go to XRP Perpetual Futures. Right, so if you look at XRP Perpetual Futures, you don't see this huge spike like you did in XRP USD, right? So here you see this huge spike, here you don't. So in Perpetual Futures contracts, this is where you get the put call options, things like that, things for investment, which could possibly make this a security, right? So that's where you get the perpetual futures contracts from in trading view. But if you're just looking at the Coinbase price, right, the exchange price here, then this is what you're looking at. So I'm still trying to figure out what happened to let's see here, to it on this early November date, that caused it to get to this high, and then all of a sudden drop, right? I'm trying to find out if there's any fundamentals. I'm not really extremely what's the word I'm looking for, cryptocurrency savvy. I know quite a bit about it, but I'm not extremely savvy to look for the ledger or where the ledger is, to see if I saw. I know people do. I did see on Twitter the other day that somebody was complaining about there's hundreds of thousands of orders being entered into the market and the price isn't going anywhere, right? But that could mean there's also a ton of orders leaving the market and the price isn't going anywhere. But this is where I come in and I say it's all a facade and it doesn't matter. It's all done by huge institutions that have the most control over this currency, right? And they're just like the dollar, just like gold, just like anything else. Price can be manipulated, and more than likely it will be manipulated, and unless you know what to look for, you don't know where it's going to go to next, right? So I was looking at XRP, and whenever I saw it, kind of hovering up and around these areas, I was looking at down here and noticing that even though it had been trading for here, it looks like it's just like it was in the same area forever. When you're trading it in between 21 and 27 cents, or for forever, those movements were at the time were big. I mean, because you could make, especially in a CFD, in a contract for difference, you could make $20 or something like that if you're putting in a 10-cent lot, and it goes up 20, actually not even 20 cents, but like if it goes up from 0.2727 to 0.2797, I think you can make, I think that's what it is, that you can make $20 on a CFD. So that's where CFDs are come into play, and that's where you can make the most money, and that's why I think these are manipulated the most. is primarily for people that are in CFDs. They will get involved in the actual pricing of this, and then also in the CFDs at the same time, and then they'll know exactly where to time where the price is going to go, and then enter. It's kind of a complex thing to explain, but they will manipulate the price so that their CFDs, their contracts for difference, can get the most profit with their broker, right? So it's not exactly profit with XRP or a profit with the actual currency itself. It's going to be profit with those that are exchanging in between you and your broker, right? So your broker typically takes the opposite side of the trade with you in those cases. So, and unless you kind of know how institutions think or what institutions see, you don't know how to trade that. So, that being said, whenever I saw it make this huge move up, just like any currency, there is going to be a large area right at the very bottom to where people are going to have what are called buy limits, right? Buy limits in CFDs are triggered whenever the price crosses that line, right? And then you also have what's called a stop loss, right? So if price enters the buy limit, right, but goes through your stop loss, you have lost all the money that has went down below, or that you've went to that point. So that being said, I want to pull this up, and you can clearly see there. Let me get a little bit even. Well, first I want to point out, this line right here, right? So this line that was basically the bottom of XRP for quite some time, which was right around 2250, I want to say. That seemed like it had been the bottom. Jeez, I always hit the wrong thing, so sorry if that just flashed off my screen, and it was because I hit hide on on Google Chrome instead of Option H, which would mean horizontal line, right? So there would be the bottom, right, or would be called the support. So in retail thinking, instead of smart trading or instead of smart money thinking, in retail thinking, you are taught to put your buy limit above, right? Put your stop loss either at the support zone, right, or just under, right, or just a little bit under, because price should not get below that zone, right? Price should, and as you can see, if I pull this up even a little bit higher, you can see, and I talked about this in my last video, you can see it touch, and then maybe get a little bit below it, right? This would be where probably this was actually the lowest point that it got before July, right? Most recently before July. So this is the lowest point that it got, was September 23rd. After that, you had 1, 2, I think you get 3 touches of this line of around 2275, somewhere around there, 2280, before it takes off, right? And then what does it do, right? And if you're taught to buy into retail theory, then what you would probably do is that you would have your buy limit set around this area, but you would have it set to something close to like this, probably more like this, just because that right there was your lowest low, right? Before July. Nobody, I don't think, expected it to get to spike down through to, I forgot what this low was here. 21.35. I don't think anybody expected it to get that low, especially a couple days ago, on December 23rd. Especially when I think it was December 22nd was the SEC filing, right? So, which I think I even put that, where was the high of that? The high of that was right here, I think. So, yeah, so right here was the high the day before SEC filing, the lawsuit. But even then, you had a lot of volatility here in XRP before that. So this is somebody taking control, buying up a lot of XRP, and then manipulating the market to anybody who got in. I would say, there's probably a ton of people that got in before here, and I'm not for sure. Maybe they had sell limits or something like that if it got to a certain point, and they probably did have a buy limit set and a stop loss set just like this on their exchange, and probably lost a lot of money because it spiked right through that, right, and then got down to that 21 cent area, that 21.35. So it spikes down through that. So what this did is it basically took a lot of people out of the market. A lot of people that were trading, anybody that had any kind of futures in there, it just basically wipes them out of the market. Now the people that are holding XRP, yeah, they're still holding it, but what is it? I mean, it's back to being, to 30 cents, or, it's at 29 cents right now, whenever we were used to seeing it, in between 22 and 27 for quite some time. So now it's back down to that area. So has Ripple seen its phase? Well, I don't know. I think what it's waiting to do now is it's waiting to see what the SEC ruling is before it actually does make a move again. But if I'm going by technical analysis, what smart money would tell me to look for, and this is what I was saying in my last video, I still have my little long drawn out, is that it's going to come back down, right? So anybody who, what the institutions did, right? You want to look for it in these last candles before a big displacement. What I mean by displacement is before you see, so you can see the consolidation right here, and this around this 26 cent, 29 cent area. This is consolidation right through here, and then you see a big push down, right? And then after that, well, not a big push. It's actually just another consolidation push, but then it has a huge push up. Big push up, right? I want to say they said it was like a 48% like increase from the previous day, or from this consolidation, was that 48%. So what does it do? Let's get in here a little bit closer, right? So it has that push down, right, and then it has the push up. There we go. Spikes up. This is another liquidity run. So anybody that was short, right, was expecting it to go short, that had any kind of stop loss, above that, or especially if you see something like this over here to your left, right, and you're thinking that this is a safe area to go short on once it comes back up, right? Again, playing the retail game, going short. Putting in a short position, just like right around here, and then putting the stop loss just above the wick, which is what you're kind of taught to do in retail. What does it do? It goes through it, it takes you out, and then it continues. So that right there is an institutional move. An institutional move, it's a run on liquidity. They drive price higher. They take people out of that were in that trade. It goes from out of your pocket into the broker, and then it goes from the broker to whoever is on the other side of that trade, right? So whoever got out of whoever put a long, right, in there, in that from down here, whoever saw that this was going to be a long and said, you know what, I'm going to get out, right at above this wick. That's who that money went to. Anybody that was short, and so that's kind of how the game is played with smart money is, it's going to go up and above, these little retail areas to where people think is safe, as a safe support and resistance zone. It's going to play those areas, and it's going to play you, and it's going to take you out unless you know how to read them and know where they're at. Right. So my thing is that now that I know where this little last down push was, right, before the up push, is that this is where the institutions sold, right? They sold just enough to where they could get a better position to go long, right? So they sell, and then they go long after that, so that way they can make more money. But they have enough money to hold that sell, right? They can still hold that sell and be in the red for quite some time until it comes back to that same position. And then once it comes back to that same position, they can release that sell, right? And then after that, they're all profit. They didn't lose any money on that sell because they had so much money that they put in, I don't know how many orders or whatever it was that they could to make the market move that much, right? And they knew as soon as they would do that, it would drop a certain amount, and it would drop just enough that they could put the rest of their orders, as much money as they could, into it going up and also above, right, these other retail areas to where people thought it would be safe, taking those traders out, and then making all that money, because they're not going to be able to make money unless there's somebody on the opposite side of that trade, basically. So bounces back, right, comes up, and I'm looking at this considering this equal highs. Now, whenever I recorded this on yesterday, on Christmas Day, and I said I looked at this and I said it's gonna come down to this last push down, because it has to mitigate, it has to release those orders that everybody, or that institution, whoever it was, that pushed it down before it went up. It has to get down to that area to mitigate before it can get back up. So far, I'm not wrong. It did push up a little bit, but I also said to watch out for a certain area. It was a little bit higher than this. I think if we got in the 5 minutes of it, I think that was the area I said to watch out for. But I think that's going to be the next area to watch out for, because that's where they pushed it down, right? So here you have this green candle, right, where they pushed it up and then pushed it back down, but it didn't get all the way down to that candle yet, that the last push down candle. Let me get back to the hour. Jeez, why does it always move me around? What it did do, so a lot of people would say, since you have this spike down here, right, this would be considered your support, or your resistance, I mean, and it shouldn't get above that. Well, it does get above that, and it gets above that because it hits this candle, right? So this is your last push up before it comes back down. So this was more likely the case, right? So this was coming up here, it remitigates like it would come down to here to mitigate. So it comes back up, it releases all of those buy orders that it had, so it can sell, right? Now it's selling to come back down to release more of its sells, if that makes any sense whatsoever. That's kind of the point of smart money, is that there are large institutions in these areas that can force the money supply to go in either direction, right? And that way they can make money on their CFDs or contracts for difference, because that's worth way more than actually the investment of XRP. So that's why you see the volatility in this market, is because the CFDs are worth way more than the actual investment itself. Uh, and so now I think what's going to happen is that, and look, wait, what I haven't, when I said we'll probably get down below here, what I'm seeing now is two equal lows, right? So what a normal, or what somebody from the retail world, right, would look at this and they go, look, there's two equal lows. This is support, right? So I'm going to bet, or I'm going to put in a long position, right? Or I'm going to put in, a limit, a buy limit order, right? Once it gets here, and then I'm going to expect it to get as high as the moon or something like that, right? Keep going. Let's just keep going up. Let's just say that this is what you're expecting. It's going to hit this bottom, right? It's going to hit this support zone. I'll put a little bit above it, right? So I make sure I get in the trade, right? I don't want to risk too much because I don't have that much money to risk, right? And then it's just going to go to the moon. What's probably going to happen is that it's going to go straight through it, right? It's going to hit this one of these little bottom candles here, right? That they had that last push down. It could be even lower than this, but it's probably going to be somewhere in this area. And then that's why I drew this here. I drew this yesterday, so you can probably take this, extend it out in the future. Probably go straight through it, right? Take everybody out, and then continue on up. Now, why do I have it stopping here? Because what price does is it looks for two things. It looks for liquidity, and it looks for balance, right? Right here is your liquidity. This is your liquidity. It's going to go, because everybody has their buy limit set right here. So whenever the market gets down to this and it starts executing those buy limit orders, that's liquidity. That's when the money is released into the market. That's what liquidity is, right? So liquidity released into the market, right? And then it goes through those stop losses, taking that liquidity, right? The institutions, right? The big banks, or the big institutions that have their money invested in Ripple, right? It takes that money out, right? And then it goes up, and now it's trying to find another place of either balance or liquidity. Now, I think at first I thought it could probably bounce here, right? It may bounce here, go down a little bit, because there is another area of mitigation. Mitigation meaning where they pushed up to sell down. So right here they pushed up to sell down. So they come here, they release all of those buy orders. They sell, right, until I get to a point to where they did it again, or they actually know it's going to keep going higher, which I think they know it's going to keep going higher, because here you have equal highs, right? So if you have equal highs, here is another area of liquidity, meaning that people are looking at this going, well, once it gets back up here, it's going to go short, right? It's going to go short, and there's that spike there. So it shouldn't get any higher than that spike, right? So I'm going to enter the market here, make sure I get into that trade, but it shouldn't get any higher than that spike, because that's the resistance zone. And then so it should go this way, right? That's your retail theory. Well, your smart money theory says, nope, I'm going to keep trading through that, so that way I can take everybody's money that's in this area, and then find another area to where I push the money up and then went back down where there's a gap. And to me, I think it's this area. This is your kind of last area before you kind of see it go sideways right here a little bit, and then it pushes down. It doesn't really go sideways again until you get down here. So again, that's why I think it's probably going to mitigate here, one of those sideways areas. I'm going to come back up until it hits another one of those sideways areas. And that would be right here around 47.18, I think I want to say, or 48.17, sorry, 48.17. I think it'll probably get to maybe 49.21, but I think those are the areas right there where you had that push up before the push down, before it rebalanced. As you can see here, right around this 49.90 area, 49.85, right around the 50 cent mark, somewhere around there, is where you had a big push up, you had a push down, and then it pushed up, it had the big spike again. So whenever you see that spike right after another spike, usually what it's doing is it's remitigating, right? It's that manipulation where they're pushing it up, so that way that last push up, they can release those buy orders that they had, right? Because they know they're going to make more money on the sell, right? So they bought, they pushed it up, they sold, made money, right? They bought, they pushed it up again, sold as it was coming back down through here. Those buy orders that they had, they released, and that way they just made money on the sell on the way down on their CFDs. I hope that makes sense to people. I'm trying to make this as simple as possible to understand. But I really hope I'm trying to make sense to people, because that's exactly what smart money is. That's what it does. So whenever I'm sitting here, I'm looking at, I'm talking about the news and everything, Ripple, and what does it all mean? To the smart money world, nothing. It means absolutely nothing. The price is going to do this because the institutions are still involved in the manipulation of the price and to get it to do what it wants to do. So, I mean, unless there's something that really shakes up the Ripple world, which would, unlisting it from an exchange, would definitely be one of it, which I think is what caused, one of the big dips, or one of the huge, I think it may have caused this one. I'm not for sure. But, those kind of things could cause it to crash significantly. But right now, I think there's so many institutions that have money in Ripple and in XRP that it's not really going to matter. That they are going to be the ones buying and selling, trying to control the price of this currency, so that way they can make the most money off of their contracts for difference, right? And just because something that has a contract for difference doesn't make it a security either, because that's how Forex is traded. If you know anything about Forex, foreign exchange environment, it's all traded through contracts for difference. I mean, of course, you do have your options and your futures, your puts and your calls for those currencies. But, like if you're going to, bet on GBP USD or, GBP JPY or something like that's more of a CFD, contract for difference. So, anyways, I still stand by what I think is going to happen to Ripple as far as the price goes. I think... Why? Okay, there we go. I was going to say my webcam got a little blurry on me there for a second. Sorry about that. I still think it's going to push down to about this 20. What is this? 26-23 area. In between the 26-23 area, 25-60 area, somewhere around there. Actually, 25-30 area. Probably push around to about that time, and then because that's going to push through this liquidity zone, right? Push through the liquidity zone, get to around that last down push before the up push. So that way, anybody who had a sell in here that's still holding that sell can release that sell and then buy, right? And then push the price up and above here, right? To where people are probably going to try to sell again because I think this is a good, safe selling point because it happened 1, 2, 3 times in this area. Actually, more than that, 4 or 5. Looks like there's quite a few selling points below the 39 cent mark. So I think people are probably going to think it's going to sell around here, when in fact you have uh, a big imbalance right through here. So you have an imbalance area. So the imbalance means there's basically a gap in price. It'll probably go through that gap in price, just because price likes to fill gaps. They used to 95% of all gaps get filled, and then go up to an area of your last up down push basically, to rebalance itself, right? So it's always looking for liquidity. It's always looking for balance. So still stand by that. So that was your special on Ripple. I'm glad you guys watched it. If you get the chance, I'm going to switch something. It's going to have a little bit of a different background, but I don't mind. Please like, share, subscribe my channel if you can. That would be great. If you want to hear more, yeah, at least if you can't, just give it a thumbs up. At least that'll help me out with the YouTube's algorithms, and let me know that there's somebody out there watching. And if you want to hear more of my technical analysis, subscribe, because I do a lot of technical analysis on this, and I try to describe why smart money does does what it does, and the way it is. And I try to help people understand, what could possibly happen next with the price. So, like I said, I drew this little, down up scenario yesterday. It went a little bit up first, before it came down, but it looks like like I said, it made a double bottom on purpose. I think it purposely made that double bottom, kind of a double bottom, to make people think it's at a floor. You're going to have people start, especially CFDs, start buying soon. And then I think it's going to cut right through that and then get down to, this last little area. Again, this, a 26, 23 area, around to the 25, 30-ish area. So, all right, that was it for me. Thanks a lot for watching. My name is Ted. Again, this is my thing I do call Bodies and Wicks. Again, like, share, subscribe, and I shall see you guys very, very soon. So, have a good night, and to remember to always wear your pants. Any advice or information on this website is general advice only. It does not take into account your personal circumstances. Please do not trade or invest based solely on this information. By viewing any material or using the information within this site, you agree that it is general education material, and you will not hold any person or entity responsible for loss or damages resulting from the content or general advice provided here by Bodies and Wicks. Its employees, directors, or fellow members, futures, options, and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the futures and options markets, as well as Forex. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy, sell, trade futures, spot Forex, CFDs, options, or other financial products. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in any material on this website. The past performance of any trading system or methodology is not necessarily indicative of future results.